Hey everyone, an exciting show. It is our expert series. It is Monday. That means we bring Greg Dickerson back to the show. And given what's going on in the market, we're just going to talk about what he and I have been seeing in the market today. So how you doing, Greg?
I'm doing good, Michael. How are you?
I'm excited, frankly, about what I am seeing. You know, I have been investing, since the dot-com crash. I invested around the 9/11, profited extremely well during the financial crisis. So I'm excited by what I see, but I'm also a human being with a heart, and I know there's a lot of people scared and by what's going on. So I know you've been investing for as long, if not longer than me. And why don't you talk about, why this is maybe an exciting time for you and why you're getting ready to do some big things.
Yeah, man. So it's March of 2020. You never know when somebody's going to be watching this. And we've got the coronavirus. We've got the stock market going nuts here for the last couple of weeks. So it's March Madness meets Monday Madness, right? So,
That's a good
the
one.
thing that the thing that I've learned in every market cycle is there's always opportunities. And I'm the guy that always looks for the positive and the glass is half full and that kind of thing. So right now, what I'm seeing is two things. It's an excellent time to be raising capital if you're looking for capital or private investors for your deals, no matter what you do. If you're buying businesses, if you're buying residential real estate, if you're doing commercial, multifamily, syndication, whatever it is, it's a great time to be raising capital because all of the liquidity coming out of the market is going to be looking for yield and looking for a place to go all the way down to the private level. So for the individual investor that has money in a CD, money market, annuities, people that are looking for fixed income off of those things because they don't want to put it anywhere else. I mean, they're getting almost nothing now. I mean, what is the Treasury 0.4, today, this morning? So, I mean, it's going to be at a point to where they're almost going to have to pay to keep their money in the bank if
Yeah.
things continue. Now, this is obviously short-lived, related to what's going on. A lot of people think it's just fear of coronavirus, but I'm texting with a guy right now that I'm mentoring. He's a multifamily syndicator, and he's a pilot. He's got friends in the airline industry, and there's planes parked everywhere. They're laying people off left and right, cutbacks. So it's affecting the conference industry. It's affecting hotels, travel, airlines. It's going to potentially affect sporting events if it gets like it did in China. Then the United States is going to be shut down.
Mm.
So this isn't panic. This isn't fear. This is just the reality of why the stock market is doing what it's doing, because it's anticipating and foreshadowing the earnings losses and potential bankruptcies of companies that can't be out of business for a month. So, I mean, that's what a lot of people aren't thinking about with a lot of the stuff that's going on. If you're doing business overseas and your entire business is related to an overseas operation, China, whatever, you're not doing any business right now. That can shut you down if you don't have the proper reserves and, things like that. So those are the types of things that are going on. So from a raising capital standpoint, if you have opportunities for people to invest with you, and now you can give somebody a 5 to 7% return, and that's huge. You're not
Mm.
going to get that anywhere else. It was 8 to 10. We started coming backwards from 10 to 12, 8 to 10. Now 5 to 7. If you can give somebody a 5 to 7% return on their money, they're golden. The other thing is refinance. So the other thing that's happening is short-term and long-term rates on properties are coming down. So I heard a report this morning that it's almost like, the lumber store post hurricane, the refinance boom.
Mhm.
So if you're on the fence about buying something, refinancing something, things like that, I mean, we're at a point now to where the rates are probably never going to be this low again once we hit
Yeah.
them. So it's a good time to be buying, refinancing, taking advantage of those opportunities, as well as raising the capital to help support all that.
Yeah, I mean, and the other thing that's going to happen is, and I've been calling for this for weeks now. Eventually, this is going to hit the owner occupant psyche,
Mm-hmm.
right? I happen to work in single families a lot more because I think that's a better deal today. I think multifamily is still overpriced, but
Oh yeah.
the reason I bring that up is my biggest competitor is somebody coming in with 3.5% down, right? They can just
Right.
flat out pay more. I've been asking real estate agents, and I got my first note this morning that this last weekend was way down. Open houses were way down, right?
Yeah.
Visitors. And I think that continues. And again, I don't want to sound insensitive, but I'm smiling because I know my market. I know what a good or great deal is. And I promise you, the rest of the year, I will only do great deals. The last 2 years, I was doing good deals because it was just so much competition. I will only do great deals this year. And I will probably do more deals this year than last year because people are afraid. I mean, 2010 was the best time to buy single family homes. They were giving stuff away and nobody was buying. And we are going to have my thinking currently is a small window, probably 6, maybe 9 months, where the owner occupant buyer is going to retreat. And I mean, I understand why, but it's, I mean, it's funny to see the future coming and know how to play it and get ready to raise money. And I'm excited by what's coming because I didn't, in January, I didn't see this coming. Right before the virus kicked off in Asia, I didn't see it coming. I thought this was going to be a tough year because we were at the peak. But just like that, owner occupant buyers are going to start pulling out of deals. I already heard about a couple of escrows that were getting set to close this week that they decided not to, and they actually gave up
Now,
their deposit. It's funny.
now, what did they give a reason for that? Is that because they're afraid they might lose their job with what's going on, or what was the reasoning behind pulling out?
Well, yeah, they didn't want to deploy the capital, right? They were six
Yeah.
figures that they were going to have to put down. They'd rather keep a cash cushion.
Yeah, that makes sense. So, I can see both sides of that coin. It can spur
Yeah.
some people to want to buy. It can spur, a lot of people to want to refinance, pull equity out,
Hmm.
so that you do have some cash reserves to weather a downturn. But, let's say the worst case scenario happens. The United States ends up like China. We get locked down for about 30 days while stuff gets cleaned up. Problem is that's going to put a lot of people into bankruptcy. That's going to
Oh
put a lot of
yeah.
people into default. That's going to create, a lot of opportunity for people like us to come in and help those people by buying their properties and all that before all that, the worst case scenario happens. And, you rent, so you might be able to buy something from somebody and rent it back to them for a while, and
Yep.
they can buy it back at the end of the day. So that's a good little niche, to be into as well. But what's really interesting and what's going to be interesting to watch is, because we don't know anything about how long this thing sticks around. If once you clean up and sanitize, can it come back?
Mm.
We don't know. So it's really interesting time to see how this is going to affect everything. And I've already heard them talking today that the Fed's going to come out and give low interest or zero interest loans to businesses. They can make payroll. I mean, so how do you do that? Now the government's going to fund every business to keep them open. I mean, we're back 2009, when they did that with the banks, but this is way different, and so it's amazing times. I'm not panicked. I'm not worried. I'm sitting in front of a Costco right now, getting ready to go in there, but not for anything other than I don't get why everybody's buying toilet paper, right? What do you need that for? Give you the runs, the coronavirus. Something. I haven't heard that symptom.
Yeah.
Anyways, we just need some, so I'm going in. Just for general stuff. It's just that day, but it's really funny. And my Costco is not swamped. I'm in Virginia. We only had, I don't know, one case here, a couple of cases or something,
Yeah.
but it probably will eventually spread. It's probably going to get everywhere. The question
Oh, it
is, how
will.
long does it get things down?
Yeah.
How long will it continue? And where does it go? So, the opportunity is going to be created and all that. So let's talk about raising capital. So a lot of
Yeah.
people are like, that's great, Greg. That's great, Mike, but I don't know how to raise capital. I've never raised a nickel,
Mm.
you know? So let's talk about raising capital. Maybe that'll be valuable for your audience.
Yep.
So the first thing is we talk about know, like, and trust. I think we've talked about that before. You got to be known. That's
Mhm.
what it means to know. People need to know who you are. You need
Mhm.
to attract investors. You don't want to go out. I get messages all the time. Hey, I've got an 8% deal. Do you want in? They didn't even tell me anything other than I got a deal paying 8%. I'm like, what? So you don't want to get out there and just start slinging hash. Number one, there's SEC rules and regulations in terms of how you can approach investors and raise capital. And number two, nobody cares about your deal. They care about you. So they got to know
Yeah.
who you are. They got to like you. And they got to be able to trust you, meaning you need to be an expert. So if you've never invested before and you've never done any deals, but you know people with money, then find an operator like Michael Zuber that you can partner with on deals or partner with, and you can bring capital to those deals, and you guys can partner up on things. Or a multifamily operator or a real estate developer. I did
Mhm.
those types of things in my career, and I've got a handful of people I work with now, that come to me all the time with capital, especially now looking to do some deals. So you got to become an expert. You got to know your market, know your space, know your niche, and you need to specialize. So don't be everything to everybody and say, well, I got a CBD opportunity here. I've got a restaurant opportunity there, multifamily here, I've got some single family there. Oh, and by the way, they're all over the country. I'm in every market because I'm diversified.
Yeah.
What that tells your investor is you're scattered and you're not focused. So if you want to raise capital, number one, you need to know your market. When I say be a professional, know your market, know your niche, know your strategy, and be able to articulate it clearly in a couple of sentences. I buy multifamily properties, class A, core, core plus, in the markets surrounding Atlanta. And that's all I do.
Right.
And I'm raising capital for that. And I'm, here's what I'm doing. Or I'm partnering with X, and that's what we do. Or I buy single family homes in Fresno, California, under $100,000 that I can rent out for $1,200 to $1,500 a month. My long-term plan is X. I'm a refi. So very specific about what you do and how they can participate with you. That conveys that you're an expert. And then also your presence. So you want to attract that capital. So you've got to have a presence across all platforms. You need to look buttoned up, dialed in, nice, clean website that's short, simple. You want to have that look consistent across all your social media channels, and then post what it is you're doing. Don't post, hey, I have an opportunity for you to invest. Post, hey, I'm buying this house, and we're gonna fix it up. We're gonna rent it out, just like Michael does. And people partner with me, and sometimes I do it myself. So you just share what you're doing. You show what you're doing. That conveys trust and authority, and that you're an expert and you're focused and you're dialed in.
Yeah. Yeah, I agree with all that. I just want to kind of reiterate it, is the market for investing in real estate today is different than 2 months ago, right? 2 months ago, social media was running ragged. You had to, people were happy to be in multiple markets, right? They were happy to be diversified. People ask me all the time, why are you in one market? Well, I want to put all my eggs in one basket and watch the freaking market, right? I can't know Atlanta and Denver and LA and Fresno. At least I don't think I can. So today it's a strength. I am focused on one market. I've watched it for nearly 20 years, and I'm going to be doing great deals. And you're right. Share what you're doing. I didn't even know what I was doing the first time I raised private money back in 2010. I was just telling people about all the crazy deals I was getting, right? Oh, I just bought a house for 38 grand, 42 grand. It rents for $1,000. I mean, do the math, right? So I was paying, and then people came to me and goes, hey, can I help? I was like, sure, I'll pay you 10%. Oh my God, I'm only getting 0.8 in the bank and blah, blah, blah. I'm like, well, let's do it. And how many can you do? I'm like, well, how much money you got, right? So you got to be known. You got to be trusted. You got to put it out there to talk about what you're doing. And you're right. You got to focus. You got to learn your market. I mean, learning your market, knowing what a great deal is, documenting why other deals are not great, telling people no sometimes, like, no, I'm not going to pay X, but I'll pay X minus, right? In a hot market, everybody's buying. The real estate novice is just flooding the market and overpaying. It's going to be very different, April through August, which is traditionally a busy period. This could be a lost year for, owner occupant buyers. And I'm going to take advantage of that.
Yeah, it's pretty amazing. So, and that for you personally, and anybody out there that's like you, that has an operation where you're trying to become the go-to person in your market, where you want people coming to you, start talking about distress situations. Hey, if you're getting behind on your mortgage, give me a call. Let's talk about a strategy. I help people. I can buy your property, or I can just help you figure out a way to not go into default. You know how to talk to lenders and mortgage companies, whereas a lot of these people don't. Say, hey, I'll help you negotiate with your mortgage company, keep you in your house. You want to be a resource to help people in a lot of ways, not just looking to get a deal done. And, the other thing is, like you're talking about being an expert in your area. What I always tell people whenever somebody reaches out to me and say, hey, I'm thinking about branching out in these other markets, it's usually a price point thing. They're usually saying, I either don't see the opportunity in the market, or it's so cheap over there. But, if houses are cheap somewhere else and rents are cheap, there's always a reason. So you got to ask yourself, do you really want to get into that and deal with and mess with all the things that are required? Unless you can find a really good turnkey company, which there are some good ones out there. And there's some not so good ones that we've all heard about lately. But you want to make sure you've got somebody with a long history, long track record. And I'm talking long means at least 10 years or more in that business with successful, clients and customers. That's a great way to enter a market that you're not familiar with, or bigger assets. So there's nothing wrong with going a little bit more broad if you're buying large apartment buildings, because your market's only going to have so many available. So that's something that a class A core plus apartment building in the $20 to $50 million range, that's something that you can go nationwide with, right? Or, 50 to 100 million, stuff like that. But even then, a lot of areas, what I tell people is like, look, max your area out first, maximize all the opportunity in your area first before you start spreading out. And, the other thing is if you go singularly focused on your type of asset and size of asset, you can broaden your geography. If your geography is small, then you can broaden your asset base, the type
Exactly.
of properties that you get into as well. So you've got a couple of different options to stay local and stay in your market. Then you can, if you're in a small market, then you can branch out into other types of properties and other types of investments. But the best thing to do is start where you are with what you have, maximize that before you move into the next thing. One of the biggest mistakes entrepreneurs make is trying to do something else when they have something that's already working for them. And instead of blowing up and scaling and growing what's already working, they want to do something else. I say maximize the opportunity and scale and automate whatever's working for you as much as you can before you move on to the next thing.
Yeah, I totally agree. The other thing that is I'm seeing a lot on my social media feed is people from around the country kind of saying, "What's the big deal?" I don't know what it is. 500 people in the U.S., 1,000, whatever it is. This is not a big deal. The flu kills more people. Blah blah blah.
Mhm.
And what I want to tell all of those people is you are arguing a rational discussion in an irrational environment. Human behavior, protecting your family is innate, and the consumer psyche can prove fragile. And you don't bring a knife to a gunfight, right? You can sit there all day long and talk about the numbers, but consumer behavior is changing. So you can be right or you can get ahead of this thing. So sort of pick your poison. Which one do you want to be? So that
Yep.
is starting to annoy me. That
Yeah, you got
argument.
to be prepared and ready. And, it is true. I mean, the flu, more people get sick and all that. The problem is nobody knows anything about this. They don't know how long it's going to last. Is it going to come back? Is it seasonal? Is it year round?
Hmm.
That type of thing. And it is shutting businesses down. The flu is
No
not. The
question.
flu hasn't closed a country for business. The
Right.
flu has not shut down airlines,
Yeah.
So, it's different there. This is having a real economic impact. The market's not selling off for no reason.
Yeah.
This is big stuff that's going on. And trillions of dollars of market cap and market value that's being sucked out of the market. And the Fed is talking about zero interest loans. They're talking about low interest rates. They're talking about going to zero rates. I mean, this is a real situation. And we're just in the beginning of it in the United States. So we don't know what the real effect is going to be here. All we can do is just be prepared, be ready. So man, be raising capital. People are looking for people that are living on CDs and money market. There's people out there that live on that income.
Yeah.
They got no income now. So be ready to help them, be ready to refinance if you're refinancing. If you've been waiting to buy, the two things you just said, if people aren't buying and interest rates are low, man, it's a great time to be a buyer,
Yeah.
jump and buy. And, but be careful. So remember what I said, the price you pay is permanent. The debt is temporary. Interest rates may not always be this low.
No.
If things come roaring back or whatever, rates could easily go back up. And you could be in a very different situation if you've got short-term interest-only loans, which is what killed everybody back pre-2009.
Hmm.
But be smart, be careful, make sure you've got redundancy plans, make sure you've got stress test. Worst case scenarios, if you're doing short-term financing, you want to make sure you can lock that at any point without penalty, so that you've got yourself covered. And just be smart and make sure you're doing the right things. You can pay anything you want for a property as long as it will cash flow. So you
Yeah.
need to understand what's the real effect on my tenants and be prepared for that. Like right now, if you own a bunch of rental property, commercial, multifamily, whatever it is, businesses, year-round people, whatever, the cool thing is you've got something of value. People need to eat, they need to sleep, they need medical care, they got to put gas in their car. So there's certain types of businesses that are going to continue in terms of real estate. So you've got something of value that you can trade.
Hmm.
So that let's say the worst case scenario happens and the economy shuts down. If you own housing, people need to live. So that's valuable. That's worth trade. Okay. And if there is no money, nobody can come take it. Right.
Hmm.
So if the banks, you know what I mean? So if nobody's making money and everything's shut down, the economy shut down, the banks, they can't do anything. They're not going to come take it. So you still have tenants, you still are creating,
Hmm.
housing for people. So that can be traded. You just want to make sure that your tenants have a backup plan. So if you own low income housing and your tenants are, paycheck to paycheck and they have no savings, you want to make sure you get ahead of the curve and say, hey guys, start stacking up money, start doing something, because it's very real that you could be out of work for a period of time,
Yeah.
thing at every level. So just make sure you're prepared to weather some sort of a storm. If you're a landlord, be prepared for your tenants to stop paying. Start communicating with your lenders. Hey, what happens if my tenants can't pay and this whole thing, so everybody's talking about these things. So it's a very real thing. It's not a panic. It's just being smart about what is the potential here and how can I protect myself, my business, and my tenants, and my properties and businesses as things progress.
Yeah. Man, there's so much value in all of that. I think a couple of things are going to happen. One is people that frankly overpaid for multifamily and their Excel spreadsheets were just bold-faced lies. They're going to be in trouble because I invested in multifamily in the last recession and it freaking hurts because if one of the first things that tenants will do when they lose their job is stop paying rent, right? They still got to eat.
Mm-hmm.
They got to survive. They can always go move in with family. Some of them will choose to live in their car. I mean, there are alternatives to your apartment unit. And, if you bought a building that was 98% full and you were assuming, 5% in rent inflation and blah, 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 you're going to be in trouble this year. Can you carry your building with 5 negative months in a row? And I think the answer is no for most of these people that have been overpaying. So I think that's a real reality. The other thing is you brought up a couple of times is small businesses. So I live in the city of Mountain View. It's a big part of the Silicon Valley. We have a main street called Castro. It has restaurants and basically it's restaurant row and coffee shops and dessert shops. You could go there almost any day, any night, for years. It was packed. I went there this weekend, like Saturday, which was supposed to be the busiest time. It was a ghost town. I was like, and it was like at 11 o'clock. So small businesses who are paying huge rent, I mean, I don't know what their lease rates are, but it's got to be gargantuan. They are not cash flowing, right? How many of those small businesses can carry it? Most of them can't, right? Can you go
Yeah.
3 months? So what does that mean? That means that is going to infect employees that are renting. And if you were so arrogant to think that you as a multifamily syndicator or operator aren't going to have tenants that choose not to pay for a couple of months, I wish you luck because it is coming. And
Yeah, build
just the
your
reality.
build your reserves and be ready and put that stress test in place. If you lost half your income today,
Yeah.
could you continue to hold on to that property? And if that's the case, is the lender willing to do something to help you through this time? Because they are talking about those things at higher levels. So the last thing the lenders want, so here's the good news. The banks don't want your property. They're
No.
not sitting there waiting to come in and take over. They went through that in 2009. It's very expensive.
Mm-hmm.
It's not good for their institutions. It can cause deeper issues. So it's in their best interest to work it out. So how do you do that? So how do you work out a loan if you're in a problem, you're in trouble, it's a commercial, multifamily, or a house? You call your lender and you say, hey, my business is affected because of this situation, or my job has been affected because of this situation. Can I get a 3-month, 4-month vacation on my payments, and can we just add it to the back end of the loan?
Yep.
So, a lot of lenders will do that. They'll increase your balance. They'll work that out with you. Just preempt it. Don't wait to the last minute. Don't dodge them. Don't hide from them. Be honest. Tell them up front what's going on and just get prepared. They're not going to swoop in and take your house over. They don't want that. That's going to create a worse situation than we saw in 2009 if that happens. Now, again, this would be a worst case scenario, but it's very real. A lot of people are getting laid off. I mean, the airlines, like I said, I was texting a friend of mine and they're already, the cruise lines are next. I mean, they're going to start docking the cruise ships and just, the government's already said, do not take a cruise.
Yeah. Can you believe that? I couldn't believe that last night when I read that.
Yeah.
The
So,
CDC, don't take cruises, don't fly.
Yeah.
What?
Next thing it's going to be, don't go to March Madness, don't go to the NCAAs, don't go to any concerts, don't go to church, don't go, you know what I mean?
Yeah.
So all these things are trickling down, and what we don't know yet, because it's very early. I mean, this thing, I was watching 60 Minutes last night. We're only 90 days in from when this really hit the main headlines. 90 days. So, we don't know where this United States is going to be here soon. And, I just got over a cold, and I'm telling you, I'm in Charlottesville, Virginia. Nobody around here, nobody near us. We had one case in Alexandria, Virginia break out recently. I'm walking around with a cold and everybody's looking at me like, man, stay away from me. Our churches and everybody, they're already like, hey, we're not going to join hands. We're not, not going to link up, just, stuff like that. So it's interesting. It's very real, very real.
Yeah. So again, I've said it many, many times, and I'm a simple human being who is very focused on, I do what I do, right? I watch cost of capital, and it's going to be low and probably going lower, which is great. and I watch consumer behavior because they're my number one competitor. And everything you're talking about affects human behavior. It affects the ripple effect, right? The ushers and the security, and this is going to impact people who live paycheck to paycheck. It just is. So I suspect the powers that be are going to come out with some kind of emergency. Thou shalt, they'll tweak unemployment. They'll do. I mean, there's all kinds of things that are going to come out of this. But what I want to leave this conversation with is this will pass. The American economy, the American system is an amazing, almost organic thing that will work its way out. It's again proof positive that being someone who raises cash when the market's at the peak is a genius, because they look like a fool until they don't, right? Warren Buffett is the greatest example of this. People have been poking fun at him for the last 6 to 12 months because he has a ballooning cash balance. That man is going to buy some amazing blue chip businesses in the next 3 to 4 months for pennies on the dollar.
So you might be buying Apple at $20 a share.
Yeah, I mean, exactly. So,
here's the thing. And, for everybody out there, this isn't fear, panic. What we're saying is good times never last. Bad times never last.
Exactly.
And if you look at the history of the country, we've gone up and down, up and down. And, my faith is not in this monetary system or the economy or whatever. What we're talking about is be smart, be prudent, because we are in a monetary system, monetary society. It's a global economy. Yep. So just be smart and be prepared. In the ups, in the downs, there's always opportunity. So if you stay ahead of the curve and don't deny what's really going on, and like you said, watch behavior. I always say, don't watch what people say, even right now. Don't listen to what they say, watch what they do. That's the real indicator of what we're doing and where we're headed, because the Treasury, the president, everybody comes out, CNBC, and they say things so that, you got to understand, what is their perspective? Why are they saying what they're saying? Yeah. Like today, why are we even talking to you, who's listening, about what we're talking about? What's our motivation? What's our real motivation? So we could talk about this all day, but watch what we do after we hang this up. Watch how Michael does his thing. Watch what I do. And watch what these people do that are running these funds and things like that, not what they say. Of course, they don't want everybody to panic and sell out, and because they're not making any money, and it's not good over the overall economy. But then watch what they go and do with their portfolio when they hang up.
Yeah, exactly. So. Oh, that is so funny. Well, great. This has been a lot of fun. I think you're right. The bad times never last. Good times never last. I'm very happy. I was clear with my audience that I sold apartment buildings in the last 12 months to raise cash.
Yeah.
Did I see this virus coming? No. But I knew the good time wouldn't last, and I knew people were overpaying, so I sold. When you want to overpay for something I own, I will gladly sell it to you. And when people get scared and my competition retreats, I know my market. I'm going to strike. And I'm hanging up. I will be at my bank at 9:01 wiring money for a great deal. Today, I am doing that.
Awesome. Well, Warren Buffett, the best time to sell is when somebody's buying. The best time to buy is when everyone's selling.
You got it. All right, man. Well, enjoy your Costco run. I appreciate you. Let's have some fun, and we'll talk next week.
Yep, sounds good.
All right, man. Take care.
See ya.